And at the CFO level, if you have somebody who's looking at maybe the controller, you need to really start looking at this way in advance because it's strategic. It could be strategic. And I remember when I was the CFO for 16 years and I was deciding what we're doing, I said, don't come to me 2 weeks before. I mean, I got stuff to do. And they do that on purpose sometimes. And what always upset me was I would only hear from the insurance broker when it was time for renewal.
What do you think is number one reason that people do not scale their business from financial standpoint?
Well, I think that there's a couple of reasons. Unfortunately, the number one reason is then they don't have a viable business model. Either they are not the person to run a business. If you're have a startup business or a scaling business, you need to wear a lot of hats at the same time. You need to be involved in marketing. You need to be involved in outreach. You need to be involved in dealing with your clients. And you also need to be involved in the financial aspect of your business. And the financial aspect of the business probably is not the founder's core competency. You know, they're more involved in insurance and risk management, sales, marketing, being that trusted advisor to their client on insurance matters, not having to look at what they're doing is how much they're spending on rent, on AI, on benefits for them, and if they have employees, and how you balance all of that. You know, do you take on W-2 employees or do you do 1099s? And you really have to sit down and think about it and have a map to success. And a lot of them don't have the resources to do that properly, or they tried it and it didn't work out, or things got in the way and they had to pivot really quickly and they didn't plan on a pivot.
Do you think that this kind of small businesses, they're waiting for one magical client that will change this situation?
They might be, but they shouldn't be. It's a concentration of risk issue. What they need to do is to put a lot of flags in the ground, do good jobs with as many clients as possible, and get the word out. That is the best form of advertising. Happy clients who trust you. And yes, one client can be important and can help you in the short run, but in the long run, from a risk standpoint, you should have many happy clients.
You think so? So no
Yes.
betting on big, large clients. It's better to.
I mean, typically, if you're a small growing company, a large enterprise is not going to go with you. You tend not to have the wherewithal to handle a big account. They need certain aspects that you cannot handle. Large multinational insurance companies are more set up for that. If they have a specific question where you might not have the answer, you have no one else to turn to except ChatGPT, and that might be wrong.
The problem with brokers is, from the financial standpoint, Jeff, they're talking to CFOs as decision makers all the time. Okay.
Yes.
Because CFOs, they're on C-suite, they're on healthcare decision-making committee, and usually they're involved on the last stage of making a decision about healthcare plan. And it's either a CFO or a controller, depending on the size of the company. But the conversation that the brokers are having with them is usually the same that they're having with HR. They start talking about emotions. They start talking about this wonderful thing called healthcare, or they just show a spreadsheet. So there are like two contrary behaviors, okay? Either all, butterflies and, all emotions, or there's here, I have this spreadsheet. This is what most people do. In your opinion, what do CFOs look into when they are making decisions regarding their healthcare plan in 2026?
It depends on what type of CFO you are. If you're numbers driven, it's a spreadsheet. How much is it going up? Tell me a a company my size, what is the average company do? What does the average company do for their employees? That's a numbers driven CFO. If you're a strategic driven CFO, you start looking at, wow, this is a strategic purchase, and we keep people and stop them from going someplace else because that costs more money. Make this part of their compensation. We're improving our plan this year. Maybe your raise or bonus won't be as great, but this is what you're getting. And you really use benefits as the driving force of a happy employee. It depends on what you are, and it depends on the type of company you are, because a lot of it is driven by senior management. If senior management says, oh my God, it's going to go up 10, 15%, anything below that is a win, let's say. However, if they say, they start looking at turnover rates, we've lost 10, 15% of our employees. And on their exit interview, they say, your insurance is limited. And as my family grows, I need better insurance. And they're willing to make less money on their salary or their bonus, but have better insurance. Insurance can also drive tax savings because typically you don't pay taxes on your insurance. So if you're giving them a better policy, that they don't have to pay more out of pocket, which usually out of pocket is after tax. It all depends on how the CFO thinks. I was always a strategic CFO.
Are you a strategic CFO?
Yes, I always think of what's the best thing for the long term of the company.
Have you always been a strategic CFO?
I've learned the hard way sometimes. I mean, I was very fortunate. At 30 years old, I became a CFO of a $500 million startup. We left Solomon Brothers with an envelope with a couple of $1 million in it, and that was it. And we had to put together everything. And part of that was the infrastructure to build a resilient workforce. And I was dealing with people from financial services. They wanted top rate benefits for their families. That was the most important thing to them, because we came from a big company back then. Big companies had great insurance. So we wanted that to attract really good people. We were precious metals traders. We sold 40% of the supply of precious metals going into catalytic converters in the United States. So we had a big business in a small market, but it was still a $500 million business. So we had to attract the right people off of the trading desks of large international trading companies. And so part of my job as a startup CFO, I was in charge of everything except trading. I had to build this nucleus of people. And I spoke to management. I said, this is what's going to drive people here, besides pay.
You seriously took the second biggest operational expense at the company.
It's also, we were a well-funded startup, but we had to build a staff that people wanted to work with. And we didn't want to lose people left and right. Where they come here, they get made a signing bonus, and then they leave after that period. We had people there for 10, 15 years because we were a family of people, and we liked working where we did. And we built this infrastructure where people were happy, respected, and all this other stuff that you hear. But we were doing this 30 years ago. And we weren't a family business.
I think that more people should listen to your story, because usually people treat benefits as expense rather than
as a tax.
Yes. Something that you just have to do.
And I think for a insurance brokerage firm, you should be telling your clients and giving them documentation of why benefits are important for the livelihood of your business. Maybe things have changed since a lot of people work from home these days. I'm not sure, but it's an important aspect of their lives. And if they can have a better work-life balance and all the stuff, it really helps to keep people there, especially if they have families. where it's even more critical.
I just read this morning, I'm trying to find the article, I can't, but 82% of Americans are concerned about the raising healthcare costs. And I mean, more people are concerned about the healthcare costs than the gas prices. So it's like gas prices and healthcare costs, like two biggest concerns of
Yeah, I
Americans
mean,
now.
if you think about it, if you're paying, if you're in a high deductible plan, that's where they're going to start charging you more, and your deductible is going to go up. So if your deductible goes up 10%, that could be another $1,000 or more. It depends. Or either your deductible or your copay or your monthly fee. I mean,
Employers do shift the cost to employees,
yeah.
especially with raising costs, and that turns the plan just functionally uninsured. But that once again, I mean, this employee turns to the employer, and you just said that you build the whole nice working environment and people working 10 to 15 years with just by having that amazing infrastructure and healthcare benefits and everything.
I
So
mean, we also took care of them.
I believe
We
that.
did the right thing because I wanted to do the right thing, and I was fortunate in that I had the position to do the right thing. It helped me, helped my family, and it helped our employees.
It is so nice to hear. You don't meet, I mean, that kind of business people every single day who um, actually understand the value of financial side of the business, but at the same time, human side of the business. And this tandem synthesis is something very remarkable.
Well, I think if you had a good business and you're making money, and that's going to drive people to work harder, take that extra step to think, oh, how can if you have a company of 50 people and if everybody could save $2,000 just by being a good employee, that's $100,000. And that would pay for some of these increased benefits or keep the benefits level. It's just going to, people are going to care. And that is also, your clients could feel that, the industry could feel that. And, people like working with people who they like. And especially, and it's hard because now insurance is turned into a commodity business. Show me the price. And it's so confusing now with all of the private equity firms coming in, buying practices, buying and huge healthcare is buying, hospitals, practices. It's harder to shop around because, it used to be where an insurance underwriter could shop around at different hospitals. You can't do that anymore because they're all owned by the same person. So
That's
it's gonna go up. And so you have to think what's best for your employees, how you're going to keep them happy. And they know the pressure on you. And it's harder because now a lot of companies are being rolled up by private equity, insurance companies, but a lot of their clients are being rolled up. It could be a window manufacturer or it could be a construction company or whatever it is. They're being rolled up by private equity. Private equity is creating an issue about profits. Not like it's a family owned business where, okay, we have one good year, 2 good years, a couple of so years, but we're still putting food on the table. We still live in a nice house and drive a nice car, but let's keep our employees happy. And that's also how you build franchise value. In terms of franchise value is what's the business worth without leadership. And that's where the true value is. So a lot of companies now are saying, okay, I got 3 to 5 years to sell my business. Let's create franchise value in my business. And part of that is having employees, having low turnover, keeping the right people happy so the owners can sell their business at the right price eventually. So it all goes into that, and that's strategic. That's why.
Do you observe many business owners willing to sell businesses in 2026?
Yes,
Really?
a lot of businesses that
More
have.
than in recent years?
Yes, I think because the market out there is very hot as investors are doing the roll up of the businesses where a private equity firm is going to say, I want to buy paving companies, local paving companies, because I know how I can create more value by managing them better, by putting in better financial infrastructure by using other means, improving the quality of their work, having it standardized. If I don't have the resources at this location, I could bring it in from that location, and we don't have to turn down business. I think a lot of people are looking at it as an exit where they've worked hard and now the prices are high and they could get out. Because before, it was harder to sell your business because you're typically selling it to either an employee or somebody, a competitor in your area. Now that they're selling businesses to people 20 states away, and you don't know who they are, and they're just buying your business for the valuation of that business. And that's why companies come to people like us to help them improve their infrastructure. And when our CFOs go out and we're talking to the owners, we kind of give them, we work with them as a trusted advisor. There are ways to build value from the inside out. And, and a lot of investment firms track certain metrics. So it's cash flow, it's turnover. They might look at their insurance policies, not just benefits. There's errors and omission. There's directors and officers insurance. All that is really important to get that right. And, a lot of small, mid-sized businesses, they don't realize that, or they don't have the resources to start doing that. And, there's a lot that goes on to get a company ready to sell. So, and that's how we help people too.
That is such a valuable insight. You have no idea. As you were talking, I was thinking, yes, definitely in the past 2 years, basically every single broker, I wouldn't say that about TPA or stop loss carriers, but every single broker I talked to, when I asked this question, would you like to sell your business? And the answer was yes. Almost every single time. Although they, even the brokerage companies, I mean, they usually say that, hey, I'm so I'm so into my clients, I'm so into this business. But if offered the right price in the right place, they're perfectly willing to give this up for a nice beach house.
Or they do something else for 3 or 4 years and their non-compete ends and they go back into the same business.
By the way, is that something that you observe as well? I mean, do your clients do that sometimes, selling their one business and then going back 2-3 years after?
After the non-compete, depends how they negotiate it. Some have non-competes for years. Some have non-competes in the region. It all depends, or they just go work for somebody. And now it's, eat what you kill, but they don't have the whole infrastructure to have to worry about. If they worked really hard to build this business, and then they might have 5, 6, 7, 8, 10 brokers that they're responsible for, and then they sold the business, say, okay, I kind of like the money. Maybe that they had something going on in their life where they had, weddings, college to pay for, and they needed, a lot of money all at once. It worked out. Or maybe they've been doing it for 30, 35 years and they just want a beach house and stare at the sky. It all depends what motivates them and when.
So you act as a broker as well, along with structuring their deal.
We help them structure their finances. We are not a broker dealer in
Got it.
in the
Okay.
U.S. We're not a registered investment advisor and all that stuff. We know people who we could make introductions, but we don't sell. That's
Got
not
it.
our business.
What is your major? I mean, basically, it's small companies, medium companies, or large ones. Who are the ones that are coming to you usually?
Well, our goal at OCFO is to make people bankable. So it's typically small, mid-sized businesses that are getting close to their first significant financial transaction. So that could be a large bank loan, it could be a merger, it could be an acquisition, or it could be somebody knocking on their door who wants to buy. And you should typically look at that a year to 2 years before you anticipate doing something. One of the biggest issues is the valuation will be lower if your financial infrastructure isn't up to par, where your financials are late, inconsistent, wrong, don't track key metrics, don't track benchmarks, and your reporting is not strategic. You don't have policies, procedures, internal controls. I mean, if you think your business is worth 10 times free cash flow, someone's going to offer you 7 times just because of that issue. Well, there's a risk involved. I mean, it might.
Even if the sales catch up, right?
Yeah, but it's the infrastructure where
I
you're
totally
not.
agree with you. I just want you to actually bring up this kind of example as well, because usually people think that, hey, if my sales run good, I might not run business
Right,
or
but
financial.
if your business is good and you have franchise value where you are not producing 80% of the premiums, your other brokers are bringing in money too. That's franchise value. And you've given them enough incentive not to go anyplace, or you give them a piece of the business, or you tie them down to contracts where now you have franchise value that someone wants to buy into. That's why you have to take the time in advance and have a strategic plan. And it costs money to have a strategic plan. And that's what we do at OCFO all the time. We help people get ready for their first significant financial transaction. And we also work with pure startups, but they pay us a small sum of money on a monthly basis just to do the bookkeeping, accounting, and all that stuff. But as they grow, we grow with them, and their business has other issues that we could help them with because we really become their trusted advisor. We have over 50 CFOs and almost 100 accountants, and we've done 1,400 engagements in 35 countries in the last 13 years. We're a powerhouse in what we do.
And it's such an honor to have you on the show. Thank you very much again for, for being here.
Yeah, I mean,
But it's
I ran my own. I run U.S. operations for OCFO, but I had my own outsourced CFO group for 15 years where we did CFO and compliance work with hedge funds, family offices, Cs, ACs. So I know the business very well where, as I said, a lot of the management, they don't want to get involved in finance, but they trust you so much and you have so much responsibility because they put it on your shoulders because that they trust you blindly. And in the hedge fund world, it's a compliant universe because most of them or almost all of them are registered with the SEC and we're signing documents there. So and they have, big time auditors. So it's a lot going on in the outsourced CFO world.
what about the audit that your CFOs do? Uh, Once again, not speaking for all of them, but maybe you observe some certain tendencies. When you do audits, what is the first thing about the healthcare plan that you look at? Like the first thing on the paper, we're not talking about employee satisfaction or something like that. You don't know
Also,
about that yet.
just to use the right terminology,
Mhm.
we don't audit the healthcare plans. We review the healthcare plans.
Yes, that's
Okay,
exactly.
I just want to make sure the
Yes.
terminology is correct. We're not going in and auditing a big, MetLife.
Mhm.
We're reviewing it.
Yes. Absolutely.
What you do is you look at it to see what the value is. You should have 2 or 3 other companies you could look at the same time, compare prices for similar offerings. The confusing part sometimes from the CFO's perspective is they're never exactly the same. Blue Cross Blue Shield, that they might have 150 policies. So you have to try to get it right. So they're comparable and you're comparing apples to apples, not apples to oranges. And then you can start saying, okay, what happens if I change this aspect? If my deductible was 1,000 and now I make it $750. Or what would happen if I offer another plan that might have other attributes to it? Now I go to a high deductible plan where the deductible, let's say, is $5,000, but the monthly payment is half. How does that work out for my employees? Because like younger people tend to have high deductible plans because there's also tax advantages to having a HSA account, a health savings account. you know, not to go too deep into the weeds, but the health savings account, that's your private savings. Even if you leave that company, you take it with you. And that's all pre-tax dollars. So it also is a strategic use of the client's money. It's another way of saving
Okay.
and deferring taxes. So, and then you start looking at, what's going, if you have a lot of middle paid employees, how will this affect?
You
And,
compare the plan usage to employees' salary and their
and,
capability to pay.
see if they're capable of making these payments. Yes. Now,
Amazing. I'm
everybody,
really
everybody's different because you don't know if they have a spouse or what the spouse's deal is.
of course.
And sometimes what we suggest is, instead of putting them on your policy, you give them incentive to go on their spouse's policy. So
Mhm,
you may
mhm.
pay
Yeah,
them
that's quite common, by the way. Yeah.
right, right. So you're reducing your cost, but then again, they might bring their spouse over because, or maybe not
The
the
other
spouse, but
plan
their
is not.
kids, because
Mhm.
your program is better than their program. So there's a lot that goes into it. And, unfortunately, for a small, mid-sized business, you only look at these things 2 weeks a year.
Mm.
I mean, that's and at the CFO level, if you have somebody who's looking at maybe the controller, you need to really start looking at this way in advance, because it's strategic. It could be strategic. And I remember when I was the CFO for 16 years and I was deciding what we're doing, I said, don't come to me 2 weeks before. I mean, I got stuff to do. And they do that on purpose sometimes. And what always upset me was I would only hear from the insurance broker when it was time for renewal. I mean, I just think you reach out to them every quarter, maybe a newsletter or whatever. Hey, this is what's happening in our industry. So you're
With
not
data, right? I assume. With
data,
data, updates.
but just call them up and say, hey, how you doing? How's the business? Anything we could do in the interim to help you? Oh, and stuff like that. It always, because like we're writing big checks every month, and it would always irritate me. But that's the type of person I am. CFOs, they don't want to hear from anybody because they got their own stuff going on. It all depends on where you are and how you feel. But that's me. I like a relationship with the third party people who I'm working with. And tell me what's going on. Like, tell me what now there's so much news. You could look in the newspaper, or online, or whatever, so you could get that feel. But it's good to have somebody who's trusted. And if you're a startup or emerging brokerage firm, you want their client to say that their friend, their brother, their sister, their niece is starting a business. Who should I go to, Uncle Jeff? Oh, go see Susie. She really cares about her client. And that's how you get clients. That extra. And what do you think large brokerage firms do? They have whole departments to sending stuff out to people for that reason, that you can't make a decision without looking at what you received from them. And I'm sure they have third party people preparing monthly memos or updates for small, mid-sized businesses, brokerage business, that you could white label them to a certain extent. And they'll put on your marketing material, your logo, and it'll look like it came from you. But
They will definitely put out some marketing material throughout the year, but they will never give you data if you're fully insured. So it's like marketing material is. I mean, I always say that large insurers are. It's very difficult to find anyone better at marketing than large insurance companies, and every small broker should learn from them how they keep in touch with the client throughout the year, not giving them data.
right. Like I said, like I'm not an expert in insurance, but it's the same thing with, we were hiring Ernst and Young as our auditor.
Hmm.
We were hiring, law firms, big law firms.
Right.
I just don't want to hear from you when it's time to renegotiate. Now, the industry has changed so much now, where now you have individual. I might be going off topic here, but now
Please,
insurance
please.
insurance brokers are selling PEOs,
Hmm.
which was when PEO started 10, 15 years ago. Like, like they never did that. they were the competition. Now the PEOs are saying, oh, let's use insurance brokers to sell our wares, sell our services, which is kind of crazy. And if you think about it, it's because
Insurance brokers, especially when we're talking about self-funding, they put together lots of programs, okay? And they turn self-funding, especially in year one, into one big mess, which self-funding is one big mess in year one, especially when you're transitioning from full insured. But when you also have all these programs on the top, and then everybody doesn't know how to use them, and you put those shiny bright things in, it gets really, really messy. So you're talking about brokers selling that. I mean, because they do not succeed in selling their basic thing, okay, they add on all those products thinking that they're going to turn into one-stop shop, uh, instead of just selling a 5-year plan to people like you. Go
yeah, like I
in.
said, I have friends in the PEO business, and it's like I remember when it started. We were buying PEO our insurance through PEOs because we were small boutique trading. A lot of my clients did because they were small boutique trading companies. And they were used to Wall Street level benefits. All right, and you could go to a PEO that only did Wall Street type, small hedge funds, and they would get what they wanted, and they were happy. They would have, the right plans. They were in the right groups. That we made sure that their kid's pediatrician was in the group type thing. And that's what you have to do if you're buying small. But if you're going big and you have employees, and you really have to think wide, or is this the right thing? But a lot of times it's driven by cost. And then, what a lot of companies will do is they'll say, okay, we'll go for the more expensive program, but we'll match your payment into the FSA or the HSA type thing.
Mhm.
But they'll pay half of your deductible, get it over the line, because they still have to make money too. So that's what I talk about strategic. It's not that simple to decide which program to go on.
Is deductible a big issue when you look into the plan? I mean, is that one of the first things that pop up?
It's out of pocket expenses to your employees.
Hmm.
Their monthly premiums are going up. Their deductibles are going up. It's a lot of money. If you don't make a lot, it's a big percentage of your wages goes towards insurance.
Question based on everything that you just said. In your opinion, how much does a good healthcare plan, decent healthcare plan that the majority of employees are happy with, save money to employer?
It depends. If their plan is not adequate and they have to replace certain people, it's an untold amount of money, because now they have to replace this person. Depending on who they are, they might have to go to a recruiter. And if they make $100,000, they're going to be paying $25,000 to $30,000 in recruiting fees. Plus, then there's the other side of that process where now they have to train the person, and depending upon where they are, it could take them a long time, and they might not be up to speed, and that's going to
The
drag the
quality of
whole
work, right?
company down. Not the whole, but drag that process and make that slower. That's one risk you have. And, I don't know offhand all the statistics of what a sensible out of pocket expenses on a percentage basis versus income. That I don't know, but yeah, and it's not going to get any better. Inflation drag, inflation that we have now, someone has to pay for it. In the medical world, we live in a litigious society, someone has to pay for that. And a lot of new drugs are out there that do amazing, save lives, but they're expensive, and sometimes they're not covered. So you have a choice of, do you pay out of pocket for it's? I'm just glad my kids are adults, like, and they're off the payroll. It makes
And
life a lot. It makes life a
hopefully
lot
living a
simpler.
healthy life, right?
I think so. Yeah, it's crazy. That's all I could say. But If you're strategic, you can do the right thing by your employees. And if the broker teaches their clients to think strategic, they will be a trusted advisor and they will not want to leave them. That's what you need. Long-term clients. Put the flags in the ground, make sure they stay there every year, and they'll tell their friends, family, colleagues who to
That they
hire.
wanted to go there. Mhm.
They'll take care of you, don't worry.
Mhm.
And then you have to go and tell the people who work for you, this is the way we treat our clients.
Yes.
Because we have a business here. And if you can't do that, then we don't want you.
If some company, for example, wants to go on the market in 2 years and to use your services and actually prepare itself for the
Mhm.
sale, what can this company do right now, like 2 years prior, to make your job easier and more effective in 2 years?
Well, I think what they need to do is take a look at what they have currently. So
Mhm.
in the like the private equity world, it's called sell side due diligence. You take a look at what you're doing. Where is it below par? Where does it exceed expectations? And really concentrate on bringing up everything to par, to what's expected, bare minimums. And what they'll find is it's going to help them have a higher valuation, but it's going to make their reporting so much more strategic, and they could really get information to help them run their business better. That they could have metrics to look at, profitability per type of insurance, per employee, who are the better performers, have the different strategies to increase everybody. And if you're getting this late, that's not what you need. You need to have information to tell you how your business is doing. A lot of good business owners, they might take a step back from selling and do more managing because now they have the information that they've always lacked. If I have 10 producers, yes, I know who's producing, but I might not be able to know what their pipeline looks like. Because maybe you don't have a CRM, or maybe you're not tracking, or whatever it is. And maybe you don't want that in your company because you want people to not feel that they're being crushed by the man upstairs type thing. But and then what we do is we make sure that all your numbers make sense, that they're backed up. And when someone comes to do due diligence on you, it's a check the box. It's just, okay, no problem. Then you start looking at how your company is set up. Is it an LLC or is it a C Corp? Then you start looking at your internal insurances, like I noted before, errors and omissions insurance and all that stuff, because you have to make sure you're covered because you don't know what all your people are saying to their clients. And you want to make sure that you're covered just in case. You want to sell or someone comes to you, you say, okay, we're ready for this. Let's do it. Now, they might still negotiate based on current market conditions, but they're not going to say your accounting or financial infrastructure is lousy because it's not. And a lot of times, all you need to do is to tweak things a little here, a little there, and over time improve it. And what I found is once you give management a tool, they're going to want more because they didn't know this can, and they can say, wow, let's start looking at which underwriter is giving us a better deal. And I'm sure there's software out there that you could use. And, I'm just talking off the top of my head, but there's a lot that you could do if you have the right information, garbage in, garbage out type thing. If you have the right information, it makes you think more strategic. And maybe at that point, if you're strategic, maybe you think about, well, maybe I should bring in a partner, and it increases the value of your business. And if they're going to buy in, instead of selling, maybe you bring in a right the right part, and maybe
Change.
or combine businesses. And now you say, okay, well, this is the way our business runs. how does your business run? If it doesn't run like our business, well, maybe I could get a better valuation on mine and worse for yours, and I'll own a bigger percentage of a combined business. I mean, that's the way life is.
What about changing those people's minds in general, changing the C-suite's mind? I think this is one of the uh, most complicated things in the world. When you come in and you just mentioned that you introduce a new structure, right? You give them the tools. That's what you said.
Right.
And they feel inspired by those tools. But don't they have this kind of resistance? Or by the point they come to you, they are already so open for the idea of change.
Right.
So what is happening? I mean, what is
Well,
happening at the moment when you meet them?
well, then you have to read the room, but maybe there's a senior partner and a couple of juniors, and maybe the juniors say, we don't want to sell. We're 45 years old. The senior person is 65. Maybe we figure out a way of raising some money or something, or buy him out or her out, and we could keep the company because now we have these tools. I don't know how people think, but if you have tools, you'll have a better and for those year, 2, 3 years where you're getting ready to sell, you might actually be a more profitable business and help your valuation because now you have the tools to get there.
Sure.
And,
Like,
a lot of
build
people,
it like you sell it.
right. I've been on both sides of private equity. I've been on the buy side and the sell side. And, you want to buy a business that won't give you surprises. So if you have clean books and at a certain price point, they're going to come in and do a lot of due diligence on, and they're going to kick the cans and do all this other stuff. And if you could say, here you go, we're clean, they're going to be happier and they'll be more trustworthy, and they'll look at you as a well-run machine, and that helps your valuation, and that should increase the franchise value of your business. They could say, oh, let's use this as our main operations, and we'll just put everybody into here because these guys know what they're doing. Whereas a lot of times they say, we don't care about your operations because we're going to move you someplace else. It all depends.
Well, I'm sure that your client will find you, and hopefully from this podcast, they will be able to learn more about you as well.
It was a great conversation. I really enjoyed myself. And if anybody's looking at me, for me, Jeffrey at OCFO.com or on LinkedIn.
I will leave both links on this video.
I'm sure you will.
This video.
Thank you very much.
Okay.
It was great.
Thank you